Us live on the show, special guest Manish Santalia, Vice President and Fund Manager at Motilal Oswal Asset Management PMS Division. He joins us, of course, live from the sidelines of the Kotak Investor Conference. Afternoon, Manish. Thanks for sparing the time for this chat. It's been a spectacular January, hasn't it? I mean, who would have thought we'd seen this kind of a rally in the month of January alone? But do you think the next couple of months we're going to be seeing a fair amount of consolidation before the budget comes in?
Yeah, we have seen a risk-on trade globally thanks to what the US Fed had to do, keeping interest rates low as late as 2014. And, we also had a rate cut in terms of a reduction in CRR happening last month. I think it's a liquidity-driven rally, plus a sector rotation from moving away from defensives into the beaten down rate sensitives. I think this trade is going to continue, but I think a confirmation of a lasting rally will only come post-election results and post-budget.
Right, Manish, January has been a month of sorts. Not only Indian but global equities as well as commodities have also surged. So what is your portfolio strategy given the fact that we've appreciated a good 11.5% to about 12% in the month of January? However, the fundamentals are still shaky.
I think selectively, I think we are going positive on rate sensitives. We have always liked banks, so, we have changed our portfolio on the banking sector to a overweight. Autos are an overweight. We are still very shaky about the infra pack as a whole or the real estate pack. But I think selectively going forward, there could be a sector rotation moving slightly away from defensives and going aggressive on rate sensitives in a big way.
Within the banking pack, Manish, the bias would be clearly towards private banking names, or do you think there are still a few PSU banking names which look attractive?
As far as the banking sector is concerned, we are positioned both on the PSU as well as the private banking space. But within the private banking space, we are sticking with the best in the class, which is basically HDFC and HDFC Bank. But within the PSU banking space, I think there's a lot of value. We have seen the results also for the third quarter, and the results have not been that bad as was being made out to be, in the run-up to the third quarter results. So we have seen a decent pullback in prices post the results announcement. I think there's still a lot of value in the PSU names. I think there would be a case of moving away from select private sector banks into public sector banks.
Manish, a quick reaction. An ET Now exclusive that Financial Technologies has filed for their RHP for the MCX IPO. Would it make sense for the investors to put in money into financial technologies and make trading gains?
I'm not tracking this stock, so it's difficult for me to comment on the developments on this one.
What is it that you are, recommending to our investors at large? I mean, how much cash levels should investors maintain in such a market environment, or would you say they should be fully invested at the current juncture, considering the pace at which we've climbed to 5,200?
I mean, this dilemma will always be there, but I think looking from a slightly longer term point of view, we have seen Indian markets coming down heavily, whereas earnings have grown 50%, if not more, in the last 3 to 3.5 years. Valuations are down to 12.5 times, and we have repeated this time and again. And you have a flood of liquidity sloshing around in the world system at 0% and 1% in the US and the European Union. I mean, you look at it and you would tend to believe that Indian equities are undervalued and cheap. So, whether we have run up 11.5% in the month of January, we could see some consolidation. But I think Indian equities on an overall basis for the year 2012 should be a good one, albeit with a caveat that we should have some policy reforms and government should be willing to take some bold decisions in the budget, particularly on the fisc side.
Right. Manish, given the rally that we've seen in January, have you had to rework your year-end Sensex target or Sensex EPS estimate? Because we've also had a fairly decent Q3 earnings season so far.
I think we are still in the middle of the Q3 result season. Once that is done by the middle of this month, fresh look at the tabulations would be done. But on an overall basis, whatever numbers have come out so far, if not, most of them have met the expectations or, have exceeded the expectation. That is what my overall sense is. The tricky ones are yet to report numbers. So, the likes of companies which are having huge debt on their books, how they are going to shape up will decide whether we are going to upgrade numbers or not. But overall sense is that sell side analysts are projecting a more bear case scenario, looking at the numbers which have come out so far. So they are mostly in line or slightly ahead of estimates.